Hey guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on Shopify, ticker SHOP. Reason for this is we are down just around 5% today. We are at a 52-week low, and at least of our analysis, it's in a relatively good buy zone. So it's something we'll go through and analyze now. So as always, we start off on a clean daily chart so we can see is there any gaps that need to be filled, so we can use these as some sort of price targets. Right off the bat, we have a gap for around this $1,023. We can also see this lines up quite well with previous support, which is good to see on the gap because it should be even more strong. But really, apart from that, we're not really seeing any other gaps as of now, or no other very obvious gaps. So looking at this, we can see that Shopify is at or below kind of this third deviation. You see it's below the third deviation on the daily, as that's around $940, and it's $900 near enough smack on the 4 hour. So we can see it's near enough there. When you see stocks down at the third deviation, that is really where you expect the absolute bottom to be. Now, why is this? Well, if you understand standard deviation, you know 68% of data should be within the golden ones, because that's the first deviation. 95% of data should be within the blue deviations, because that is the second deviation. And then we should have 99.7% of all data between the green deviations, which is the third deviation. As we can see with SHOP, it's kind of below or at the third deviation. So from a statistical standpoint, it makes sense to be getting long, and this is why we use standard deviations to take these trades. Now, obviously, we are as an overall market selling off, so that is probably a thing to take into account when taking these trades. And so one way I'm kind of offsetting this risk is, instead of buying shares, using strategies such as debit spreads, which are option strategies, as a way to kind of offset risk. And now you may be thinking, why don't we just buy kind of long dated call options? Yes, you could be doing that, but one thing to take into account is implied volatility. As you can see over by the daily chart, our implied volatility is around 0.9, and that is a thing to take into account because implied volatility plays a large part on the price of the option. So even if Shopify starts to increase in price and implied volatility falls, you may not even stay green, or you just shouldn't be, or you won't be as green as obviously if implied volatility is low. So that is just one thing to take into account when looking at Shopify long. But now, as it is something we have turned long bias on, what are our targets? Really, that first target is going to be that gap fill. Again, it's not going to be something where we're going to look to lock in everything, but maybe an area where we at least move our stop, and depending on your strategy, maybe lock in a small amount of profit there. Otherwise, we would keep looking for it to continue up. We may again use kind of 112 or $1,112 as kind of a next target again to either move stops or lock in a bit of profit. And then where we start locking in a good amount of profit, depending on your style, you can lock in some at this third deviation, so the $1,225 to around $1,285. But really, that key and final profit target is going to be $1,390. And why is that our final target? And that's because it's the so closest to statistical mean that we have, and that's all what we always try to trade to. The reason for that is, if you understand standard deviations or anything really, everything tries to reverse to its mean. So that's what we look to trade to. Once it goes to its mean, it then can push up, then can easily push down. It's a lot more of a gamble guessing direction from there. So really, we just trade from a very overbought area or a very oversold area, in this case at a third deviation, and try to trade it back to a statistical mean. And that is really kind of the overall breakdown on Shopify. Obviously, markets are selling off, so take that into account. It is a tech stock, and we are seeing the Nasdaq sell off a lot heavier than, say, the S&P 500, so do take that into account. So if you're looking to trade it a bit differently than usual shares, obviously options are that kind of opportunity. But again, when looking at Shopify, implied volatility is high, which makes just buying call options quite risky. So maybe putting in strategies instead could be a good way to get around this. Things such as debit or credit spreads one way you could be looking to trade it. But that's the overall breakdown on Shopify. So I hope you enjoyed the video. If you did, don't forget to like and subscribe. Otherwise, I hope to see you in the next video, and that's it. Peace.
I go dumb for that money, dumb.